U.S. stock indexes ended with modest gains Tuesday as the market extended a choppy holding pattern ahead of Friday's May Nonfarm Payrolls report and next week's Federal Reserve policy meeting. The S&P 500 index edged up to its highest close in a week. Equity prices were underpinned by continued declines in Treasury yields, which slipped to their lowest levels in over 2 weeks earlier today after the Labor Department's Job Openings and Labor Turnover Survey, or JOLTS, came out weaker than expected. Job openings in April dropped to 8.059 million, the lowest monthly figure in over 3 years. The market otherwise appeared to lack much conviction with Friday's jobs report looming. Analysts expect non-farm payrolls grew around 185,000 last month, slower than last year's pace, but still firm enough to maintain skepticism over whether the Fed will lower interest rates anytime soon. ADP's National Employment Report arrives Wednesday. Here's where the major benchmarks ended. The S&P 500 index gained 7.94 points, or 0.2%, to 5,291.34. The Dow Jones Industrial Average added 140.26 points, or 0.4%, to 38,711.29. And the Nasdaq Composite rose 28.38 points, or 0.2%, to 16,857.05. The 10-year Treasury note yield fell more than 7 basis points to 4.328%, and the CBOE Volatility Index, or VIX, rose 0.05 to 13.16. Energy shares remained under pressure amid a continued slide in crude oil prices. WTI crude oil futures dropped for the fifth straight trading day and ended at a 4-month low just above $73 per barrel. Oil prices slumped this week on reports OPEC plans to phase out voluntary production cuts later this year. Retailers and banks were also among Wednesday's weakest performers. As far as stocks on the move, Bath & Body Works tumbled 13% after the retailer's stronger-than-expected first-quarter results were overshadowed by softer-than-expected second-quarter guidance. Microsoft added 0.6% following reports the tech giant will cut hundreds of jobs from its Azure cloud business. Separately, a Barclays plc analyst said the reported layoffs demonstrate a commitment to profitable growth, as this round follows last year's large round of layoffs due to growing costs associated with artificial intelligence. Saia jumped 6.7% after the trucking company reported an increase in shipments in April and May compared with year-earlier levels. And Stanley Black & Decker fell 3.7% after Barclays downgraded the stock to equal weight from overweight and cut its price target, citing expectations for sluggish sales growth in the year ahead. Wednesday brings earnings reports from retailers Dollar Tree and Lululemon Athletica, along with food maker Campbell Soup. Lululemon is one of the worst-performing retail stocks this year, with a drop of 40% through Tuesday. The stock has been under pressure since March after Lululemon issued weaker-than-expected full-year guidance. Lululemon is expected to have earned $2.39 in the previous quarter, according to Yahoo Finance. Other athletic apparel shares, including Foot Locker, Nike, and Under Armour, have also slumped this year, illustrating broader concerns over competitive headwinds and sales growth. Investors ended Tuesday's session with the bulk of a data-heavy week ahead, as well as the June 11th and 12th Federal Open Market Committee, or FOMC, meeting, which is expected to end with no change to the Fed's benchmark funds rate. The weaker-than-expected JOLTS report, combined with Monday's larger-than-expected decline in the Institute for Supply Management's manufacturing PMI, boosted odds for a Fed rate cut in September based on market indicators. But Friday's jobs report will likely carry the most impactful numbers this week regarding the near-term outlook for interest rates. The unemployment rate is expected to hold unchanged at 3.9% and extend its run under 4% to well over 2 years. Average hourly earnings are also expected to draw scrutiny because the Fed's historically sharp rate hiking cycle over the past 2 years has been aimed in part at slowing wage growth to tame inflation. Wages are expected to have risen 0.3% in May, a slight uptick from the 0.1% increase in April. Wednesday's ISM Services PMI could also shed light on inflation patterns, according to Schwab Center for Financial Research Analysts. Services inflation has been a key driver of overall inflation, and services spending makes up a large share of overall consumption. Many Fed officials have suggested the need for a higher for longer policy, but have generally pushed back on the need for additional hikes, the analysts added. Last week's Personal Consumption Expenditures, or PCE index, the Fed's preferred inflation gauge, was a step in the right direction, but Fed officials will need to see a few months of data like that before a rate cut seems more likely. Late Tuesday, traders priced approximately 66% odds the Fed funds rate will be at least 1/4 point lower following the FOMC's September meeting, up from 46% a week ago based on the CME FedWatch tool. The tool priced in a nearly 100% chance the rate will be unchanged after the June FOMC meeting.